Hi guys, this is Annie from Mommy Trades. Hope you guys are doing fine and keeping safe and washing your hands. I just wanted to go through one of the trades that we did today based on the levels that I gave out, and I'm talking about Amazon. So I gave out the levels for Amazon and we scalp traded for calls. So let me get to the Amazon chart here and then explain you some background. So you see how the market was green today, and we were in an upward trend, and the market was green by the time we woke up, and this Amazon stock was trending up higher, and the 9 EMA and the 20 EMA was pretty much holding the stock and keeping it up, and the buyers were coming in and in control. Even on the higher time frame, we see that the bullish action is intact, and we don't see a lot of bearish follow through here. So when you drill down to a shorter time frame, which is the 2-minute time frame based on which we did the scalp trade, we see, of course, the trend is same. You see a lot of bullish action here. You see a lot of green candles. We saw that the stock went higher till 1910, then gave up a little bit of gains here, and then it was held again by the 20 EMA and pushed again by that support, and we see that it broke the resistance, and it started going back higher again. And you see how the 9 EMA is nicely pointing towards higher. Then we see that we get some bearish action here, and we see that the stock starts to go back down, starts giving back a little bit of gains here, so actually these red candles are good for us, because this is when we start getting ready for our setup. This is because we know that stock is an upward trend. We know that it's being held by our EMAs. We know that it's being, it's jumping off from the support. So we need to see this selling action a little bit to get that weak pullback, so that once we see that the buyers are back in control, we get in. So right after this 1040 candle, which was the bearish candle, we see that we get an inverted hammer candle, which tell us that the buyers are back in control, and somewhat the selling is stopped, and we get supported at 1891 level. The next candle becomes our setup candle. So the setup candle means that the top of this candle, whatever level it is 1903.01. So that area, that level, would become our buying level whenever we need to get in calls. So 1903.19 is our level to get in calls as soon as we get it. So this is just a setup candle. This is the level that we have to see in the next candle or so to get in calls. So we wait for that level. No, we did not get it. Still, it's sideways. Still, we see some consolidation trying to break that level, but not there yet. No, we did not get it again. And these are all 2-minute candles there. So we had a conditional. You can have your conditional orders ready, that as soon as the the stock reaches the 1903.19 level, you get in calls. So you see, as soon as that levels get executed, you see that the stock breaks that resistance, that sideways consolidation, and it goes higher. And it gave us a nice $10 move. It went up till 1913 something, and we got a nice jump on our option calls there with some nice profits there. So we have to see that how the stock acts around its support levels and its resistance levels. That's important to see, and what kind of bars are we getting. So once we know that the stock is uptrending or downtrending, vice versa, you can play these setups accordingly. So that was one trade that we took in the 2-minute time frame. Now you see, again, moving forward at 1110, we see that we get a bearish candle again, and it's being supported at the 1891 level again here. We see that the next candle at 1907.5 becomes our setup candle. So yes, you can treat this candle as a setup candle, but you have to see that what will be the risk and reward. See, the next resistance up is very close. So for Amazon, a $2 move will not give you much, right? So like getting ready to get in calls at 1907.5, the risk and reward is like 1910. We have another resistance coming up. So I mean, nah, I will not get in and not get in calls because it's already given us a nice jump, even though you would have, probably gotten it, but it's not an ideal setup to get at that point. So but you can play these levels based on where the stock is at, how it is doing on the support levels and resistance levels, how it's acting around that, what are the EMAs doing. They can be used as guidance in but the most important aspect to getting in a trade is price action itself. All these other indicators, even if they are the moving averages and all that, they are just lagging indicators, so you can use that just to see the trend of the stock. But overall, just pay attention to how price action of a particular stock is doing, and you can play puts accordingly, the same level, and this is the same level you play rejection at. Look at the resistance levels of the stock and see what level it touches up to, and then it falls back. Where do you get the most top wicks at, and which is the level that it's being rejected at? And then once you get a bearish follow through, you can set that up as your setup candle and get inputs on the following candle. So these are some of the setups, and you can always go on to my website to refresh your memories for the different setups that I have for my members. They're always helpful, and they let you get in trades yourself. And scalping, I say, is not alertable. I can set out the levels for you, but you use them intelligently, and you have the information behind why you're getting in a trade. So that's important. All right, guys, I will leave here, and you guys have a fabulous rest of the day. Stay safe. Thank you so much for listening. Bye.